Greetings, friends. This is Matthew Holt from Christian Wealth Management, bringing you financial guidance from a biblical perspective. With all that's going on in the stock market and economy right now, I'd like to share with you the 5 biggest topics that have come up again and again over the last few weeks and are top of mind. Number 1, emotions. If you have any money invested in the stock market, you're probably experiencing a heightened level of anxiety right now. But unless you truly think this is the end, you have to believe the stock market and the economy are going to recover like they have from every virus, war, and recession in times past. I remind my clients often, when it comes to the stock market, that you only set the price twice, when you buy and when you sell. To move into cash by selling shares now would be to sell your shares very cheaply, meaning you'll be getting much less for them. Now is the time to remain calm and lean on the advice of your financial advisor, who should hopefully be able to provide you with wise counsel in these very uncertain times. Number 2, emergency reserves. If you've ever sat down with me to talk finances, you know the first thing I'll tell you before we ever start talking about investing is becoming debt-free and creating an emergency account. Right now, many people across the country are realizing the importance of this advice, some more than others. If you've been faithful to maintain 3 to 6 months of expenses in an emergency savings account, you will most likely be able to ride this storm out, even if you're experiencing a temporary job loss or a reduction in income. Now, the federal government just passed the Coronavirus Aid, Relief, and Economic Securities Act, also known as CARES, and will be allowing Americans to tap into their retirement accounts early without penalty. While this provision may keep some from filing bankruptcy, losing their home, or going further into debt, it comes with a high price tag of putting your retirement in jeopardy. That's why having adequate cash reserves is truly the best safeguard against recession. Number 3, diversification. According to John Hancock Investments, as of the end of last week, energy companies were down almost 52%, while consumer staple companies, like toilet paper manufacturers, for instance, were only down 14.5%. While no loss is ever desirable, your investment account will be able to recover more quickly from a 14% decline than a 52% one. And since no one can ever know for certain which industries will be affected by the highs and lows of the market, it's important to always maintain a diversified investment strategy. Now, this doesn't mean handpicking 20 or 30 individual stocks. A single mutual fund will quite often hold over 100 companies. So as a rule of thumb, I recommend a buy and hold strategy of 2 to 5 different and good performing mutual funds in each of your investment accounts. 4, risk tolerance. This is a phrase we use in the investing world, and some advisors refer to it as the pillow test. When your head hits the pillow at night, are you worried about your investments? If the answer is yes, you're probably invested too aggressively. You might also be losing sleep if your very conservative investment account is only returning 5% in a 20% up market. Ultimately, while risk tolerance is partly determined by peace of mind, it should have much more to do with the objective of the account. Are you investing for retirement, to send your kids to college, to buy your first home, or simply to grow wealth? If you're saving for retirement in 30 years, you should invest aggressively. But if you want to buy a house in the next 2 years, you should be more conservative. The closer you are to your goal, the less aggressive you should be. The current stock market environment is a perfect example of why this is so important. You don't want to be getting prepared to retire, send your kid to college, or buy your first home and experience a 35% drop in your account value. Number 5, silver linings. And I'm going to give you 3 of these. Even in adverse economic times, if you look hard enough, there's always opportunity to make and save money. With interest rates being slashed by the Fed yet again, now is a great time to refinance your mortgage. The national average for a 30-year fix is currently 3.65%, with 15-year rates in the low 3s. These are historically some of the lowest mortgage rates we've ever seen, and refinancing now can save you tens of thousands of dollars in interest, not to mention reduce your monthly payments. If you're in a 30-year mortgage and have the cash flow, consider moving into a 20 or a 15-year fixed to get your loan paid off that much sooner. Start the process by calling your existing lender or visit bankrate.com to find a competitive lender offering a no points fixed rate loan. Here's another one. Over the last few weeks, I've received many emails and phone calls asking if now is a good time to invest in the stock market. The short answer to that question is yes. Many experts are calling the current market pullback the best buying opportunity in recent years. This is because stocks that just recently had a very expensive price tag are now selling at a deep discount. If you're someone with a pile of cash sitting in a savings account giving you little to no yield, you might consider injecting some of that into good performing mutual funds or ETFs. Work with an advisor to guide you through the process, and remember, your 3 to 6 month emergency account is not part of the equation here. Last but not least, there are opportunities afoot to mitigate taxes. Until recently, many investors with highly appreciated stocks have been wary of making changes to their accounts for fear of owing a lot of capital gains tax. Since stock valuations have dropped substantially and are now trading closer to their purchase price, also known as cost basis, it might be a good time to rebalance your accounts, diversify your strategy, adjust your risk tolerance, or go biblically responsible without paying excessive taxes. Keep in mind, retirement accounts like IRAs and 401ks are tax sheltered and allow you to make changes tax-free anytime you want. Consult your financial advisor and or your tax professional for help. And remember, you're not selling into cash. You're exchanging one stock for another. Think of it as selling low and buying low. In closing, I offer you Proverbs 3:5-6. Trust in the Lord with all your heart and lean not on your own understanding. In all your ways acknowledge him, and he shall direct your paths. When it comes to managing the resources God has given us, we should always exercise wisdom and discernment. But ultimately, we don't place our trust in worldly riches or ourselves because we have something far better in Jesus Christ. If you found value in this video, please hit the like button and share it with a friend. And until next time, be blessed and stay safe, my friends.